This is Alan Bush with ADMIS. In the stock index futures, we are seeing some pressure this morning. This follows, for the most part, weaker equity markets in Europe. There is some concern among equity traders that if Scotland does vote to secede from the UK, that could hurt business to some degree in that part of the world. So some spillover effects here in the US with our equity markets under some pressure. Longer term, though, I think we can still see higher prices. In fact, even today, I think there will be a recovery later this afternoon. Still thinking any weakness should be viewed as a buying opportunity for stock index futures. Over in the foreign currencies, seeing follow-through weakness for the British pound. This after a weekend poll showing that Scotland, by a margin of 51% in favor of secession, tending to undermine the pound quite a bit yesterday with some continued selling today. Also, we had a comment from the Bank of England governor saying that interest rates could be increased in the spring of next year. Normally, this would be a very bullish development for the pound, and yet this has been totally ignored. Even better than expected industrial production numbers in the UK also not having an impact. So it's the referendum on Scotland to secede from the UK scheduled for September 18th that is dominating the markets in that part of the world. So between now and then, I think we can see continued pressure in the British pound. Also, we are seeing lower prices in the euro currency on the ongoing belief that the European Central Bank will be forced to add more stimulus to their economy, possibly in the form of a quantitative easing program. So we continue to look for lower in the euro currency. Also, the yen continuing to come under pressure, closing in on a 6-year low against the US dollar, and the ongoing belief that the Bank of Japan will be forced to add some type of additional stimulus to their banking program or banking system as well. So look for lower in the yen, and treasuries under some pressure. We do have a lot of supply this week, and I think that is probably the main reason why we are seeing some weakness over the last couple of days. In fact, the Treasury will auction a total of $61 billion in notes and bonds this week. However, we are in an area of support, still thinking that the main trend is higher for Treasuries, and I would not be surprised to see at least a partial recovery this afternoon in the 30-year bonds. Still thinking longer term that we will see better prices for the long end of the curve, specifically the 30-year bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.